Welcome back, everybody. It's time for another edition of Earnings Exchange, where we'll give you the action, the story, and the trade on three key reports on deck. Today's lineup: Disney, Beyond Meat, and SoFi. Let's kick things off with Disney. The media juggernaut expected to report earnings of 51 cents a share on nearly $19 billion in revenue. Despite its strong brands like Pixar and Star Wars and Marvel, Disney warned subscriber growth for Disney Plus would likely come in weaker than expected. The shares are actually down 3% on the year and down 15% from their all-time high back in March. Let's bring in our own Julia Borson for the story here. And Delano Saporu, who is founder of New Street Advisors and a CNBC contributor, and he will give us our trades today. Welcome to you both. Julia, Disney's almost become a punchline, Disney Plus, with this issue, I guess, about its offerings.
Well, look, Disney Plus had been growing so quickly, and then Bob Chapek warned that growth in this quarter, this is the fiscal fourth quarter, would be in the low single-digit millions. Analysts, though, are still anticipating that it's going to be more like the addition of 9 million Disney Plus subs, so we'll have to see how that number shakes out. That's going to be very much in focus. Other areas to watch include the theme park division, how fast that division is rebounding, and what the sense is of how much that rebound is going to continue into next year. And then also, of course, sports. Disney has spent so much on sports rights. Are they going to be investing more? And what is their plan in terms of ESPN moving more of those rights onto ESPN Plus, Kelly?
All right, Delano, what is the trade here?
I think the trade is to hold, Kelly, and I think just as Julia mentioned, the big thing investors are looking at right now is the theme parks and experiences growth to offset some of the slowdown in growth in direct to consumer. So that's a big thing that I'm looking at. I think you saw that the management is stating that they're seeing some stronger reservations, they're seeing stronger demand. So that might be an area where investors can hold their hat on. If those numbers start to increase, as we see we're getting away from the COVID period, I think that's the biggest play here. So you want to hold and see if the times of 2019 can come back into the stock.
All right. We'll leave it right there. We'll move along, Julia. We appreciate it, and we'll see what they say on subs this evening.